Again, it's been a while since I've done this, so where do we start from? Right, so I spent a lot of time this weekend like digging into what happened with GME over the past like 2 weeks, trying to figure out a wave structure that makes sense, you know, relative to the broad market. And I mean, obviously there's gonna be more than one count as a possibility at all times, but so getting into the sequence, for one, I am pretty tired. I'm still on like Italy time, so if I sound like monotone, that's why. I'm gonna be explaining like what you see on screen here, what makes this count valid, the invalidations, and what would make us look for, you know, the bear count instead. And obviously both counts are valid. This was the count, right? And so this is still what we're working with here. And essentially, before I go back, like, you know, looking at this now, the way I'm interpreting is on Friday was this orange 3 that we had. And so, you know, looking in deeper now, let's see how he could have come up with this. This has been a bit of a process because I had it drawn differently before, and I guess if I go through Discord, you can kind of see how it's evolved. And like the reason I, you know, focus on Discord is the reason I post the majority of this on Discord and not Twitter is, for one, like Twitter's immature. I don't like posting something and everyone is like, it's disgusting. As always, if you're interested in joining, the information to check this out is going to be in my Twitter bio. But I'm trying to find the count. Where were we? Okay, so let's just go with this, right? So what I want you to notice is the way I had this count structured was the one in orange, right? Elliott wave rule is your wave 4 cannot come into the territory of the wave 1. And so in theory, right, that would have meant the way it was drawn, or so in theory, right, the way it was drawn before, that would mean that the make or break for that count was, I didn't have it still, this chart's like a bunch of levels, but it would be this high right here at 131.96. I have it as 1.93, but still, right, if you look closely, you can see that we came into the territory of the 1, and so that went and invalidated the count. But I was like, because, you know, you were looking at this and we have like a bounce on this, you know, support line, upward trending support line, and I've had so much like a ridiculous amount of conviction in us testing the 157 zone, which would be completing this part of the sequence. And the reason why I have so much conviction in the 157 is basically, right, the way that the longer term count is set up is, I guess the trading view will make it a little bit easier to see, but if I go back to trading view and I go to like let's just go to a daily chart. Right, we already have the 1-2, the bigger scale. From like the way we're looking at this is like this whole period of sideways correcting bullshit, whatever, is finished, right? And that is seen through our impulsive move out of this 5 swing low, right? A, B, 1, 2, 3, 4, 5, right? We have this 5 wave move down to complete the C leg, and, you know, there's this move. But anyways, right, the takeaway is the reason why we're looking at this as impulsive and not corrective is because this wave 2, where it's drawn here, it marked a higher low relative to the low that we had before it. By, granted, it was like a few dollars, but still valid. And so moving forward, right, this ratio right here, the 618 of the entire move measured, is most commonly, that's going to be like your wave 1 of 3 target. And so when I'm counting other stuff, the same thing applies. Well, most of the time, if not all of the time, you're going to see this ratio hit for at least like the wave 1 of the 3 of that sequence. That probably doesn't make any sense. I don't expect it to. It doesn't matter. It makes sense to me and other Elliottians. So I'm not going too deep into like the rules and all that today. Not that I ever really do. But anyways, the restructuring that had to take place because of the invalidation is I switched the 1 from, you know, this high and I moved it down here. And the reason for that is, well, now we have an expanding flat wave 2. But also the subdivision, it's still the same thing, right? But you're just looking for a way that the rules are valid. But the interesting about, you know, that little adjustment was, instead of previously our wave 3 target being at, you know, 145.8, and what I'm not even gonna change it, but right, this gave like a most expected target at 148.5, and we didn't quite get that. And whenever I'm analyzing, I need to see the target hit for there to be significance to me. And so at first, right, I mean, I was traveling like the last 2 weeks, so I wasn't, you know, paying super close attention to this the way that I should have been. That's the wrong fib to be editing. But right, originally we were looking at it as 1, 2, and then this move up to here marked the 3, and then we have an A, B, C, D, E for the 4. The 4th, 5th. But the way I see this is too small, in my opinion, to be a 5th. And granted, you know, I'll go to the bear count later in the video, but I'm trying to show you guys the significance of this. So with the adjustment made, right, what this does by moving the target down to here for the extension is it actually gives us that hit on Friday. And you can look at the significance because we don't have any 15-minute candles to close it. I use the 15-minute the most just because for my scale of analysis and trading, you know, this is what confirms like my analysis, at least. This is like subjective to the person doing it, but for me personally, I like the 15-minute. And then like the 5-minute too, you should see the same type of thing, right? Again, no closes above. You'll have this, you have, right, wick above, indecision, closing below, and then that mark the turn. And so because of this ratio, the way it's drawn and everything, I am inclined to believe that this tick on Friday was our larger 3 in orange right here. So right, you can see the level in blue as well. And then our 4 down, which granted, see, the part where it gets iffy is it is a strong 4 in theory, but the important thing to notice is, for one, we do held above the wave 1 high. I don't know if this is the exact level being 130.84. Okay, close, it's the same thing. But we hold above the invalidation. This is very important for the first step. But then we'll dig deeper, right? And if we're looking on a, I'm on a 5-minute now, but like literally, let's like go even smaller. Let's just go to 1 minute so you can see what I'm talking about. Now here's why I lean the bull case, right? If you're looking on the screen here, you'll see from the high that we have here in orange, this 3, I count 7 down and not 5. And visually you can see it too, right? 1, 2, 3, 4, 5, 6, 7. Now 7 swings implies the end of a correction, right? 3, 7, and 11 are, you know, your ABC, WXY, and your WXYXZ, right? And you anyways, right? And then you can see the significance too, right? Where I have it drawn out where you have your ABC, and this makes a W. You move up as your X, and the ABC, the length of this leg relative, or the length of the Y leg relative to the W is a perfect 786 extension relative to the W. So there is significance to the way that it's drawn, which is, you know, another area of I don't know if that's the right way to phrase it, but another reason to give some sort of validity to this count. The subdivision ticket up to the top of this orange 3, right? We have our 1, 2, 3, and then an A, B, C, D, E as our floor. Sharp correction here, complex, sideways, for your 4. So the alternation checks out, and this is a valid ABCDE, and the reasoning for that is ABCDE, it's, think of it like contracting. So each leg is going to be an ABC, so ABC, 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 right? You can visually see that. Each leg has to be smaller than the previous, and so I guess I'll use the hourly because there was that one morning we had, you know, a pretty strong tick down, the low being 144.33. Then the low after that, 146.43, and then after that, 146.73. So we did make a higher low for the lower side, and on the higher side, right, it's lower highs. So while it's not pretty, it's valid. And so finally, right, if that's your 4, then we'll have a spike up for the 5. But again, right, because this is completing the larger 3, that's where it comes back together, and there's your significance of this ratio here. So finally, right, looking at the bigger picture, you already have, I explained how I got the larger 157 target, but the way you draw it is, okay, there's 2 parts actually. So for one, right, look at the yellow degree. Just focus on that for now. So you have your 1, 2, 3, and this is a running flat 4, ABC into the 4, and that's why you count 5 down from here. Right, the targets that you'll see on screen are actually, it's these 157.3 and 169.14. But again, right, we already have the larger 157. That's already the base target. And so to see this, you know, just looking at the 1, 2, 3, and the 4, that already gives this area to watch as rejection. And then finally, you know, using the data that we have from this low, what was this, June 10th up to our high on Friday, drawing that out, right, you measure the top of the 1 to the 3 down to the 4, and that gives us box between 152.4 and 158. 157. I've said 157 so many times, and like if you're in the Discord, you know this as well, but I mean, this is like the case for it, right? So the invalidation for this count is going to be the number right here at 130.84, because that would be the territory of the 1. Right, so you have your invalidation there. The subdivision up, it all checks out. And so, and then, you know, even just basic TA, right, if I take away the implied volatility on the bottom, right, you just have your basic supply and demand zones. Supply and demand zones with like your upward sloping trend line. Like, it looks bullish. It looks, the argument can be made, right, seen by the, you know, very strong reaction to this trend line. right? We take it as well as coming into this demand zone, and there's a very strong response, which is what you like to see if you're, bullish on the underlying. And so using everything that I just went over, right, that gives us the targets that I have up here again at between 152.6 and 158.3 for like the smallest degree. And then, bigger, I'll just show you how it's drawn, right? The bigger degree being, it goes a little bit higher. But yeah, the cool thing about Thinkorswim and why the fibs on here are always the good ones is because I have it set to my drawing snap to the open highs, lows, and closes of the candles. And so it gives you the exact reading, right? And so the algorithms are literally trading off of these prices. Like, these are the levels. Pretty much 152 to like 170. Again, I think 157. And that's just for the shorter term, right? So we come up to like the 157 area and then very sharp sell off. In the last video I gave the reasoning for that, but I believe it'll probably be like fucking like down here, like it'll be pretty intense. And then but then you zoom out, and the cool thing is that sets up the tsunami, right? You're 1 2 1 2, and then finally it's 3 4 5. It's just a bunch of threes, just threes on threes. So I guess now finally because remember, it should more or less look like SPY, and I have a few counts for SPY. The thing is, they're all more or less the same, and I do switch it up, but like just because the geometry should fit, and this is my primary moving forward. But like everything that's happened in the past week or two has been accounted for, right? I was posting projections back here like 9th and 10th of June, right? Like this was the idea before, and obviously like it evolved a bit, but like still this is exactly what happened. So it didn't come to a surprise to me at all that, markets were very green last week. And in fact, I like put out a tweet saying we were literally going to go to 390, and we did. As far as broad market positioning, I like to think at least that I have like a pretty good idea of our positioning. And so with all that being said, I'm not going to do a deep dive into this, but this is what I think is happening. And you can see that it lines up more or less with the GME count, which is good. Like it should, line up. But going back to GME again, you'll see where the decoupling is, supposed to happen. And so at this point is where, the market's making a rebound, but in my count, it comes to a lower high. But this is when, GME really starts to move. And, the negative beta that people are talking about, if we were to see it, I would assume it would be around here. Yeah, okay, well, I think I covered it. Okay, really quickly, the bear case, right? If we do break below 130.83, then the bear case does check over as the primary, because there isn't really another way to like really squeeze it and make the count be valid for the bull case. Yeah, okay, it would be something like this, take it with a grain of salt. You have your 1 2 3 4 5, and then your A and your B, and then we're gonna have a 5 swing down for the C. And this would, come into take over as the primary should we lose this, where is it, like this level, this zone right here at 130.84. Yeah, so the levels are pretty cut and dry as to like which count takes over as which. I lean the bull case, but should the bear come into play, I know how I'm going to be trading it. Thanks for stopping by. I hope you guys found it useful and enjoyable. Probably not enjoyable, but useful at least. If you would like to trade with me and the gang on Discord, feel free to sign up. The link is in my Twitter bio. But thanks for stopping by. Till next time.